Imagine two people at a casino. One calmly studies the odds, sets a budget, and only bets what they can afford to lose. The other is just throwing chips on the roulette wheel, hoping for a miracle. Now, replace that casino with the stock market. Which one do you think builds real wealth over decades? If you said the calm strategist, you're thinking like an investor. If you said the hopeful gambler, you're thinking like a speculator. Here's the catch. Most people think they're investing, but their actions are pure speculation. And that silent difference, how you think about money, risk, and time, that determines everything. The difference isn't just in the action of buying an asset, it's in the entire mindset behind it. Investors are focused on the fundamentals, a company's actual earnings, its cash flow, its competitive advantage in the real world. They're seeking value that will grow over years, even decades. Speculators, they're focused on price movements, rumors, and fleeting trends, seeking a quick gain in days or weeks. Think of it like this. Investing is planting a tree. You nurture it, you give it time, and enjoy the fruit for years. Speculating is frantically shaking every tree you see, just hoping something falls out. Let's explore these invisible differences. First, it's patience versus impatience. Investors understand that time is their greatest ally. They let the magic of compounding do all the heavy lifting for them. Speculators are just chasing instant gratification. They're the ones buying at the absolute peak of a hype cycle or selling everything in a blind panic. Second is preparation versus guesswork. Investors do the hard work. They research, they analyze, and plan. Speculators follow tips, rumors, and gut feelings. And most importantly, it's emotional control versus emotional reactivity. Investors stick to their plan during chaos. Speculators react to every headline, every tweet or red arrow on the screen. During the dot-com bubble, countless people who called themselves investors bought tech stocks without understanding the businesses at all. They were speculating on hype, and they lost everything. This mindset directly shapes your strategy. An investor drives a car with brakes, headlights, and a map. They diversify carefully and manage risk. A speculator drives a sports car blindfolded, hoping the road is clear. They concentrate their bets for a massive payoff, accepting the risk of a catastrophic crash. Look at the recent cryptocurrency manias. Speculators, driven by FOMO, jumped in for short-term gains and were completely wiped out when the market turned. True investors were busy evaluating the long-term viability of the underlying technology. And that's the trade-off. Speculators might have thrilling short-term wins, but they risk losing it all. Investors have slower, steadier growth, but the compounding effect over time becomes an unstoppable force. It all boils down to the question you ask yourself. A speculator asks, will I win this trade? An investor asks, will this company still be strong in 20 years? Shifting from one to the other is like switching from a thrill-seeking roller coaster rider to a steady marathon runner. One seeks adrenaline, the other endurance. And endurance is what builds lasting wealth. So if you want to make the shift, think in years, not days. Focus on the actual business you're buying a piece of, and set rules before emotion has a chance to take over. Ask yourself today, am I reacting to hype or am I evaluating fundamentals? Am I chasing a quick score or am I building real security? Am I speculating or investing? Start today. Plant the tree of your financial future, water it with patience, and watch it grow, decade by decade. Because the difference is silent, but its impact is profound.